Good morning all and welcome to today's video. So I have three pairs on watch today and those are Euro Pound, Dollar CAD and Pound Dollar. So I'm going to break them down for you now. I've just juggled the order of my pairs around a little bit after a little bit of thought and a little bit more analysis. So at the top of my list today is Euro Pound. So why am I looking at Euro Pound? If you're noticing a lack of trend lines on my chart, that is partly because I'm trying to make this clearer for the people watching my videos, and partly because those of us who trade the Falcon strategy, we have been introduced to something called Falcon mechanics, where we use a lot less trend lines than we used to do. And once again, that helps with clarity and helping us to identify the value areas rather than focusing too much on trend lines, which can be useful, but which can be a little bit subjective sometimes. So just trying to keep things simple. So Euro Pound on the higher time frames, you can see that we have this high here, and we did wick to that area. We near missed it, but as I say, not all of these wicks get filled. Not all of these wicks and these near misses to an area of value get filled. So a lot of the time, particularly when they're that far away, it can take a long time for these to be filled. But what I can see on the as I zoom into this price action here is that we have this high here. Okay, so I've just reined one of the other things I've been trying to do. I used to do this a few years ago, but I've started doing it a bit more now that the Falcon mechanics content has has incorporated it into its teachings. So we have this, we're just going to pattern separate some of these patterns. We have this high here, and we got there structurally. How did we get to this area of value? We got there structurally. We have that kind of 1, 2, 3 middle section within it, giving me a clue that we will likely break above, catch people the wrong side of the market, as we often do, who start buying once we break above a high, and then we come plummet into the downside, okay? So that's the first thing that stands out to me and gives me a clue that I may be able to look for an entry. We then have, so this is what we call the 90% rule, so the start of a piece of structure. So we have the start of the piece of structure there, okay? And what happens when we reach this area? The 90% rule is typically an area where we either form larger corrections or we reverse to the upside, okay? Now, what happens? We smash straight through it, giving me a clue that there was not enough liquidity here to send price to the upside, which therefore gives me the impression, makes it quite clear to me that this is simply an impulse correction continuation to push lower to take out this low. Okay, the sellers have well and truly, you can see there, the sellers have well and truly stepped into the market. Where do you think, as a first target, these sellers will be getting out of their positions? I would imagine here. Okay, so yes, we could push lower, we could push down to these lows, but as a solid first target, I think it's safe to assume that if I was selling this, the price that I would be looking to get out at as a first target would be here. Okay, so that's why I've got my arrow there. Just trying to keep these setups simple. So therefore, if we know that the sellers are likely getting out of their positions here as a first target, then all we need to do is look on the lower time frames for entries. Has the market left a footprint? What I like about this move, just to touch on it, is the directness of the move. You can see we've had the impulse correction, continuation, all the way down. It's been very, very direct. It's not been a corrective move, as it has been with dollar CAD, and we'll get onto that in a minute. So that gives me a clue that we'll likely follow through with a similar level of aggression. We have to remember that the market needs to breathe. So I'm not surprised after a huge move down like that the market is consolidating for potentially the next leg lower, because it needs to breathe. Just like an athlete, the longer you run, okay, the bigger breath you need to take afterwards. Okay, so if you think of it like that, or as the pulling back of the bow on a bow and arrow before the arrow can be fired, that's kind of what we're doing here. The market is always either seeking liquidity or building liquidity. It found liquidity up here, okay, and when it broke above this high here, but now it's building liquidity for the next leg lower. Well, that's what it looks like at the moment. So as I drill down to the 1 hour chart, you can see prices left a footprint there. So we have that footprint there. Price came up, So initially we did have kind of this piece of structure here, where we had that kind of 1, 2, 3 with the middle section. We broke above, pushed to the downside. We hit the 90% rule, the start of the piece of structure, but then we wicked to the upside, giving me a clue that there was not enough liquidity here to send price to the downside, and that we were likely forming a more complex structure. And that's what it looks like we have, what we're doing. So what happens? We come back up, we near miss to this area. That is often what I call the FOMO leg. And when we near miss to an area of value, price tends to move down quite correctively. Okay, as people try to sell this, whilst the orders which are still in this area and being placed in this area by people like myself that are looking to short from this area, uh, that kind of creates this kind of pendulum effect. And then what normally happens is we push back up, we then have that 1, 2, 3, and then we typically go from there. The higher time frame direction plays out from there. That's typically what happens. However, if you remember what I just said a moment ago about trend lines, we kind of have, when there's kind of multiple inflection points. So when you could kind of plot your trend line like this, or you could kind of have it like that. And that is one of the problems of trend lines. Not so much, they're kind of one and the same, but we could potentially have it from there. Okay, when there's multiple ways that you could plot your trend line, the simplest thing to do, and I know this from my documentation, because I've taken a lot of losses. One of the things that I identified from my documentation is that a lot of my losses have come when there's been a subjective first touch of a trend line. Okay, so the simplest way to mitigate that is quite simply to wait for price to tap into that area, push down, which is the market showing its hand, and then wait for a subsequent correction, which is usually the bigger players stacking their orders for the next leg lower. That way, you haven't got to guess where the first touch of a piece of this structure is. Okay, and all we're doing then is essentially we have that high there. We come back up, we near miss it, push back down. If we push back again, take out the near miss, take out this high, and then push down and flag, that is very, very solid confirmation that we're heading lower. And then I'll be able to manage this. I would take a reduced risk entry on the break of the flag or a risk entry within it, and I would be able to manage this down to these lows as a first target for something in the region of 2.5%. The minimum stop loss we have, those of us who trade the Falcon strategy. There we go. I said it. Is 10 pips, and of course the higher time frame direction, if we headed down to that area, would be about 8.5%. Not a huge move, but not to be sniffed at. When was the last time you walked away with 8.5%? I asked myself. Probably not for a while. So that's a solid profit target there. So I'm going to move on. That is euro pound. I have an alert set below the area of value. If it does not push up, then I'll not be looking to place a trade. Okay, on this pair. So dollar CAD. Let's look at dollar CAD. So dollar CAD is slightly lower down on the list because you can see that we have broken above this area of value and pushed down, and we did get there by way of a 1, 2, 3 touch structure. But note that the structure, this doesn't have a middle section. Okay, so we don't kind of have that. It's just this kind of straight line there, not a 1, 2, 3. That's one thing that stands out to me. The other thing, the more important thing, is the fact that we have a near miss to this high. So price came close up to that area, but near missed it here. Okay, but you can see, but as I said, these near misses often take a long time to be filled. And if we just drill out to the weekly, I think it's clear to see that the sellers well and truly stepped into the market at this position. And once again, if we just zoom out to the monthly, where do you think, if the sellers have got in here, where do you think they're likely to be getting out? I would suggest here. Okay, so this is just a simple play from here to here, but of course that is the monthly chart. So with that in mind, if we've tapped into here and we're likely heading down to here, we have a low here to be aware of, but we're kind of miles away from that at the moment, then where all we need to do is to drop down to the lower timeframes to look for footprints and entries. Okay, so we have a footprint there, price left a footprint. One of the reasons this is lower down on the list is because you can see the sequences. We've had these sharp pullbacks. Now we have to be careful of that, because when we have these sharp pullbacks, we could be seeing something like Um, because of that lack of middle section, which I just spoke about a moment here, what we could be seeing, remember me saying previously in videos that if you can't find the middle section, then you may be trading within one. Okay, what we may be seeing is a middle section here, which pushes down, pushes up, breaks the high, and then commits, and then this becomes the middle section, and then we say, ah, okay, the reason we couldn't find a middle section here is because we were actually trading within one. So that's another reason why this is lower down on the list, and then potentially we take out the high that we near missed to last time around. However, you can see that we broke below here and we didn't find enough liquidity. Look how price reacted from this low. Okay, so if I just drill down, price reacted from this low, but how has it reacted from there? It's not found enough liquidity to blast to the upside. It broke below, it pushed up, it didn't find enough liquidity to push to the upside. It then smashed to the downside and then it moved up very correctively, giving me a clue that this is not of significance. And if we do push to the upside to break that high, if this is just a middle section to break the high and give us that kind of 1, 2, 3 structure, excuse the drawing, then we will likely find liquidity from here. Okay, so we will likely push down to here if we were going to do that, and then break to the upside because we didn't find enough liquidity from this low here. Okay, so even in just a move from here to here, that would give us a lot of profit potential, even if that was to occur. But as I said, if we just drill out to the monthly, you can see that that is where possibly where I would anticipate sellers getting out of their positions. So regardless, we have the footprint there. Because of the manner in which prices move down and because this is not your typical sequence, and it would be a bit more risky to take a risk entry from the area of value that you can see prices snapping back to, even though we have this kind of 1, 2, 3 touch structure there with that 1, 2, 3 middle section, which may break above and break back in, because price has been scooping up quite violently. If you just analyze this, because it's been scooping up, you could be easily tagged in, tagged out. Price scoops up again, perhaps taps into this area and then drops. That makes a risk entry where we essentially try and call the top more risky. So therefore, what do we do? And because we kind of this could, we don't really have a structure here so much. We don't really have a solid base as such where we've kind of created a base and then pushed back up. What I'll be doing quite simply is waiting for that push down and that flag once again. So I'll be looking for price to tap into this area, show its hand, push down, and then flag. And then I think it's very likely, given how we've moved up in a non-progressive way, and that we will likely find our way at least down to here as a first target for something in the region of 10%. So I'll be looking to get a short on the break of a flag such as this or within it if we get that push down in the flag, and that's what I'll be looking for from dollar CAD, just speeding up ever so slightly. I've got an alert set just below the area of value. If it doesn't trigger, then I will not be looking to place a trade. So pound dollar, this is slightly lower down on the list. This is not my favorite, that's for sure. But if we just break it down, if you analyze the structure, even if something doesn't look that great, if you can make sense of what price is actually doing, you may still be able to get an entry. So what I can see here is that we have, once again, just taken the trend lines off the chart to make things look a bit more simple. But what I notice here is that we have that 1, 2, 3 move. So with that 1, 2, 3, the three drives, we have that 1, 2, 3 middle section. We have a near miss here to here, which so we near miss to this area of value. That gives me a clue that this is a completed piece of structure, and the near miss gives me a clue that we may perhaps now be moving to the upside to take out this high, because there's no need for a price to come all the way back down to these lows. Okay, so that is the a higher time frame narrative, if you like. We then have that impulse correction continuation. Price leaves a footprint here, it comes back down, it washes out all the stop losses and the limit orders, and then pushes to the upside. Okay, we then have that slightly strange price action which I was talking about. One thing I do like, just to touch on it, this is not a massively significant area, but we have that there. We near miss to that. If we have a near miss, that's another reason why price might gravitate to the upside. Okay, and we break below here, we break below this low, and we move up. Okay, so we're trading well above here now, and well within that range, kind of from here to here, giving me a clue I don't know why there's two targets on the chart. Just let me just remove that. So this to me just looks like an impulse correction continuation to take out this high as a first target, and then potentially take out that near miss to here as a kind of overall target. Okay, so if we just drill down, you can see, as I said, we've broken above here. We did have this kind of non-progressive price action to the upside, giving me a clue that we may be able to capitalize on a short-term move to the downside to potentially take out this low before we move to the upside, or at least react from here. But the higher time frame direction took over. Okay, so a lot of the time we can see these structures on the lower time frames, or on the lower higher time frames, if you like, and then the higher time frame direction takes over. And that's one of the reasons why it's important to do top down analysis and not be camped out on the lower time frames so much. Okay, so we have that kind of impulse correction continuation to push higher. As I drill down, this is where it starts to get a bit messy. Okay, so we have to be mindful here, and this is partly why this is lower down on the list. I'm just going to drill down to the 1 hour. So we've broken above all of this noise here. We're trading above that now. We've kind of retested that to some extent, but what this could be, and this is where people get caught out, and this is where I used to get caught out. This could be a kind of bear flag to push lower. Okay, so we tap into that area, and then we have that 1, 2, 3. However, if we just count the candles, we're on the 1 hour chart. That would not be ready by the end of the day. If you see me scrolling, that would more likely be ready on Monday. Okay, so I'll not be looking for that today, because that just wouldn't be ready by the end of the day. However, if we break above this high and this high here, then we would be trading above this area of value where I had my area of value, where I had it plotted, and where I've got it plotted. We would be above here. So this may be a reversal structure. Okay, normally we don't break too far below an area of value if we're going to push to the upside. However, what we might be doing is retesting a bit of this liquidity here, and if we were to break above this high, then we would then be trading above this low, and this low, and even this low. And then I think it would be highly likely, based on that, given that we would have washed out all these lows and broke back in, that we would be moving to the upside. So with that in mind, what I'll be looking for is, if it just unhides, there we go. Right, so I'll be looking for price to, given that the DXY is selling off the dollar index, so if the dollar is selling off, then what do you think is going to happen to pound dollar? Pound dollar is likely to rally to the upside. So if we break above these highs here and we form a correction, the correction afterwards would be the confirmation that we look for. And this is why we wait for these a lot of the time, that price isn't just going to, if we just waited for price to get above, break above here, and then we just suddenly got long, this could push, just completely retrace like that, and then we end up with that kind of bear flag that I was talking about. So the correction afterwards, I want to see a solid impulse up, followed by a correction above these highs, and then that correction would be the confirmation that we look for. Those of us who trade the Falcon strategy, if you're watching this on YouTube or TradingView, feel free to, if you're watching this on YouTube, to check out the link in the description and on my channel, and you can learn more about how you can join the Falcon community. But the correction afterwards would be the confirmation that price is going to push higher, and then I would look to get long on the break of the flag within it, and then I'll be able to manage the trade up to these highs as a first target. And then, of course, the higher time frame direction may take over, but we shall see. We don't know what's going to happen in trading. We can just break down the higher time frames and analyze where people are likely to get in, the bigger players, and where they're likely to get out. And all we're essentially doing, we're not trying to smash the banks. I've heard that on TradingView quite a lot, and that always makes me laugh. If you knew how much liquidity the big boys are trading, you wouldn't be trying to smash them, I can assure you of that. What we're trying to do is we're trying to ride the coattails of the bigger players, not try to smash them, because trying to smash the banks is a bit like peeing in the wind, to use a more tactful expression. But I digress. Anyway, folks, have a great day. Have a great weekend, and I will see you again next week in the next video. Thank you very much for watching.